What's up, everyone? It's Caddy with MoneyVest. So Nvidia hitting a brand new all-time high, and of course now valued at over $3.3 trillion, and it's the most valuable company in the world, overtaking or passing both Microsoft and Apple. So huge congratulations to everyone on, of course, investing or trading in Nvidia. It is now officially up over 11 to as much as 1,200% since October of 2022. And this right here is the whopping rise of Nvidia shares, absolutely going parabolic from, again, just low $10 a share, about that prices. This is, again, on a post-split basis. So you're now sitting at well over $135 per share. So Nvidia becomes the most valuable company in the world as AI rally steams ahead, and Nvidia relentlessly has rallied to a new all-time high, propelling the semiconductor giant to a market cap over its mega cap tech peers, helping clinch the title of the world's most valuable company as artificial intelligence wave continues. Shares, of course, were up over 3% on the day today to a valuation of just over $3.3 trillion on Tuesday, catapulting it over Microsoft and Apple. We actually did have a brave soul. I was looking at different Nvidia articles and news pieces and reports and research and everything. Came across this video of this investor who essentially shorted Nvidia. And this was from 2 weeks ago. So 2 weeks ago, this person, I watched the entire video. It was actually quite interesting. Very, very good analysis. And broke down in a spreadsheet talking about how Nvidia is trading at an overvalued level, expensive valuation, parabolic price action. Intel and Cisco were two examples that this, investor presented, and how they actually back in 2000 during the dot-com bubble, went up parabolically and came back down, crashing 50-60% and then never really recovered. And for that reason, this person took a short position on Nvidia 2 weeks ago, and is of course down significantly because Nvidia is now up over another 20% from when this video came out. And in one of the comments, which actually was one of the smartest comments I've ever read, and makes a lot of sense, and this is something that I've also talked about on the channel before, was basically this. Now, I've been investing for almost 30 years. So this was the comment that I'm just going to read over very quickly. Been investing for almost 30 years, and I have to say that value investors should stay clear of the temptations to short stocks. Value investors tend to get too tied up with the numbers like this and underestimate how long a freight train can take before it reverses course. One of the best comments that you can possibly read, and that's exactly why I think it's a lot easier, and more importantly, it's more important to try, if you are going to be timing the market, right? Because if you are taking a short position, you are in some sense being, a little bit more directional, because you're expecting the markets, or whatever that stock is, to come down, and you're making a directional bet. If you are going to make a directional bet, I don't recommend making directional bets in the first place, but if you are going to try it, do it on the way up. Do it when the markets are selling off. Do it when a stock is selling off and you're betting on the way up. You're betting for that reversal to the upside. Don't do it on the other way around because of a couple things. Number one is that you can absolutely get crushed shorting a stock because the loss is theoretically unlimited. The stock price can go to the moon. It can go freaking crazy, and you can literally lose everything. Because if you buy a stock and it goes down to zero, what do you lose? You lose your entire investment, right? Whatever you invested in that stock, you lose. But if you're shorting a stock and it goes absolutely crazy like Nvidia is right now, how much can you lose? There is no ceiling. There is literally no limit to how much you could lose if you're shorting a stock and it goes against you. That's number one. Biggest flag on why you should not be shorting stocks, especially when they are in such strong momentum. That's the second point. That brings me to my second point, and that is that upside momentum is far more stronger and violent than downside momentum. Now, I will say this, that downside momentum is more violent in the degree of losses. In other words, the downside, you've heard the saying, staircases up and elevators down, because when stocks come down, when the markets come down, they come crashing down. They crash hard and they drop like 8%, 10, 15, 20 in one day, right? And they won't blink an eye. But on the way up, it takes stable, steady, like 3%, 3%, 6%, 10%, 7%, 5%. It takes very, very nice, slow and steady moves higher. And next thing you know, it's 2 weeks later and the stock's up 40% or the market's up 40%. So it's always been staircases up and elevators down. So even though like the downside momentum and the pullback and the crashes are more violent and more aggressive, they last for a shorter period of time. So the reversal is much faster. On the other hand, on the way up, it lasts much longer, right? And it's more longer lasting and it's more, momentum is much stronger to the upside because it can keep going higher, right? So markets can remain irrational longer than you can remain solvent. So it's not just Nvidia. I think Nvidia is just one of the examples that I'm giving you, but even with the market, right? So this is the MoneyVest index that I've presented in our previous videos. This is what we have created on the channel. I've created this with the help of one of our team members. And what we have really programmed here is to really figure out the rarity of the market and how rare the market circumstances are. And right now we're at 3.74. And every time we're at a higher level, every time this index is red, that doesn't mean sell. It absolutely does not mean sell. It absolutely does not mean go short. It absolutely doesn't mean buy puts, because as I've mentioned before, I use this index and an indicator to mostly trade long, to mostly buy and trade long and invest and deploy capital when the risk reward is at its best. So when the index is down here, in the green zones, we're talking, anything under 3, that's when it becomes a much better buying opportunity. The risk reward becomes much better, and we can start deploying cash into the market because that's when most of the deals are. And like I said, it can be a violent sell-off, but it's going to be shorter lived than as opposed to the markets pushing higher and higher every day, because that's going to be longer lasting, and markets are going to continue to remain irrational longer than you can remain solvent. And that's exactly why I've been dollar cost averaging into VUG, SMH, buying IWM, buying VYM, buying a lot of ETFs, just consistently dollar cost averaging into those ETFs. So I'm still participating on all the upside. My cash exposures come down, especially after the real estate deal. I will be doing a whole portfolio update for all the members very soon, breaking down every single asset class, every single stock, every single different investment that I have for all the members. But the bottom line is that long term, you have to understand that stocks, as earnings grow, as productivity increases, as we continue to spend more money, as companies continue to make more money, there's going to be progress, there's going to be growth, and markets over the long term have had a very strong track record of consistently pushing higher. So if you're betting on shorting a stock, you better be sure what you're doing, because the potential downside is huge. Like, it's the risk of shorting stocks is immense. It is absolutely incredible, and you can really lose a lot of money if you're shorting stocks and you don't know what you're doing. So coming back over to the markets here, so let's just break down exactly what the day was like. And there's a lot of money flowing back into Nvidia. Nvidia is kind of sucking up all the liquidity. And Google was down, Meta was down, Apple was down, Tesla was down, Amazon was down. Some of the other sectors, again, somewhat flat here. And this right here is over the last 1 week. And once again, Nvidia up almost 12%. Tesla also up 8%, so doing well. Broadcom, Qualcomm, Applied Materials, Lam Research, Clack Corporation, Micron, all semiconductors doing well except for AMD, Texas Instruments, Intel, and Analog Devices. But Microsoft, Apple, Adobe, Oracle, all pushing higher in the last 1 week. And in the last 1 month, once again, Nvidia, Broadcom, Qualcomm, semiconductors sucking up a lot of liquidity from other parts of the market. I mean, it's gotten to a point when it's absolutely crazy. So if you come over to some of the charts that I want to break down first. So this right here are all the industries within the 11 sectors that we have in the S&P 500. These are the top 25 industries. And you'll notice that semiconductors and semiconductor equipments are in the 13 and 14 spot. Market cap at well over $7 trillion. So 6,883 billion and 985 billion. So that's combined about 7.7, almost $7.8 trillion for semiconductors. And then if you take a look at some of the valuation here, price to earnings 57 to as much as 42. Forward price to earnings, we're looking at 29, which many would argue is actually quite reasonable, and it's actually not even that bad. And price to sales, we're looking at over 14.5 to as much as 9.6. Again, a lot more reasonable, some people might argue. Price to cash at over 33 to as much as 30. Price to free cash flow, one of the highest at over 63 and 51. And this is probably one of the only sectors, along with a sector uranium. So that's number 7. Uranium is the only other sector that has the highest growth rate for the next 5 years when it comes to earnings per share. So 48% growth rate for uranium and 31% growth rate for semiconductors. And those are the two highest in the top 25 when it comes to industry based on forward price earnings multiples here. Sales growth also 29% for this very well established sector. So again, $7.8 trillion in market cap. It's not easy to grow revenues at almost 30%, but that is again at the top of the list, along with a lot of other sectors, including uranium, 237%. Then we got other two sectors, which are biotech and realty income, which is basically real estate investment trusts here, also expected to grow at 129%. And we got one more sector at 26% sales growth, which is software application, and earnings growth of about 21%. So the bottom line is that this is one sector that has done incredibly well here, no doubt about it. And as a result, the technology price earnings multiple is the highest we've ever seen in the last 22 years. So since 2002, the forward 12-month price earnings multiple on the S&P 500 technology sector is at its highest level at over, what was that number? Over 30, almost 31. Now, if you come over to semiconductors, if you break this down, look at a microscopic level here, which semiconductor companies are, of course, doing the best? No doubt, Nvidia, the most valuable company at over 3.3 trillion. Broadcom, almost at $8 trillion as well. Price earnings at 79, forward price earnings at 37. But really, it's this number that is absolutely getting ridiculous, and that is price to sales. I mean, what the heck is going on? How on earth is a company trading at a 42 times sales when their market cap's at $3.3 trillion? I mean, this is the most valuable company in the world, and yet it demands a 41 times sales multiple. Absolutely insane. Price to cash at over 106, price to free cash flow 84, and next 5 years of EPS growth expected at 46%. So sales growth over the next 5 years, not listed. Next year, EPS 33%. Past 5 year sales of over 46%. And of course, insane amount of volume at 260 million shares traded. 13 times sales for TSM. Broadcom almost 20 times sales. AMD at almost 11. ARM at over 57. We got MPWR at 22 times sales. ADI 11 times sales. We got Marvell 11.5 times sales. So just insane amount of multiples here for this entire industry. And as a result, semiconductors, SMH more specifically, yet another new all-time high. So if you come over to SMH, the ETF that I've bought a lot of shares in, I'm continuing to kind of dollar cost average into this ETF, up another 1.5% to a new all-time high for this ETF as well. So that's where we are. I mean, with this entire market, I mean, semiconductors have just taken off like wildfire. This right here is going to be the S&P 500's performance broken down by each sector and the price to earnings multiple, along with price to earnings and price to book and PEG ratio. And again, technology, you'll notice that's where semiconductors are. Year to date, massive gain, 29, almost 30%. 1 year, 45% is the highest we've seen. But then, of course, price to earnings is also the highest at 39. Price to earnings at over, on a forward basis, 30. Price to book at 12.7, one of the highest, and PEG ratio 1.4, with one of the lowest dividend yields of just under 0.6% as well. So that's where we are with this entire market. I mean, just incredible amount of momentum for semis. I think Nvidia should literally be renamed S&P 500. I think that should be the new index. I think we should all just follow Nvidia as an index. Volatility here coming back down to 12.2. So once again, a little bit lower, 3.5% lower as markets continue to move higher. Keep a close eye on the VIX, of course, as we've talked about. It's not a question of if, it's a question of when the volatility spikes. And of course, the market starts seeing that dip or that correction or that pullback. It is only a matter of time. Eventually, we do understand, we do know that that day is coming. We just don't know when. So that's why the risk reward, again, on the long side, not the best, not the super most favorable here. That's why I'm dollar cost averaging very little by little. And when it comes to being more aggressive, I will be a lot more aggressive in the VIXs closer to 18, 20, to as much as 25 and 30 levels, because that's going to be more, more of a pullback for the markets and better risk reward ratios for both the S&P and the NASDAQ as well. Talking about Bitcoin starting to break down from this support here of 67,000. So definitely seeing a little bit of a breakdown here. Next support and target is going to be closer to $61,000, $62,000 for BTC. So that's going to be that next target. And Ether also coming down to that support closer to 3,400 for Ethereum as well. And if it does end up, let's say, breaking down even further, next support and target is going to be closer to 2,900 for Ether as well. Talking a little bit about the Money Vest Index, as we've already discussed, 3.75 is where we're at for the Money Vest Index. And again, I've kind of marked out some of the color codes here. So the lower it gets, the better the risk reward, the better the buying opportunities. So darker green, somewhat of a light green, and then extremely light green. Those are the best buying opportunities for us. And of course, the higher it is, the less likely I'm going to be deploying cash on an aggressive basis. Like, I'm not going to be plowing money into the markets. Slow and steady dollar cost averages, the markets continue to rip higher and higher, new all-time highs every single day. But of course, the lower it gets, the better the opportunities will be for us. And last time we really got that signal was back in April 20th, when we came pretty much down to low threes, and that's still in the yellow zone, meaning that it's not the best, but yeah, I mean, you can maybe get started here at those levels. So keep a close eye, of course, at the Money Vest Index. Very, very important. Crude oil prices on the way back up. So once again, we're starting to see a bit of a bounce back higher from $72, $73 a barrel. Next resistance is going to be closer to $80, $81 a barrel here for crude oil. And of course, if you do end up, let's say, breaking out above this level, the next target is going to be at $87 per share for crude. Now, if you come over to the markets, more importantly, S&P 500, NASDAQ. So I'm going to leave you guys with the analysis of both of these indices. I will be doing separate episodes on the technical analysis of the Magnificent Seven and the other companies that we look at. So I think that's going to be a more dedicated episode or video moving forward, because then you guys can kind of look at it, different companies, different stocks that you might be interested in. But this is mostly going to be for the market updates, the technical analysis on the markets itself, and give you guys some updates on the catalyst that happened on the day. So S&P 500, new all-time high. We got 77 on the RSI. MACD also pushing higher with the L3 banker oscillator pushing up to an extreme level. So just got to be extremely careful and cautious here. This has happened over and over again. So this is not something that I'm making up now. It's happened literally every single time we've gotten up to overbought levels. Yes, it's taken longer. In the past, we kind of hovered over that 75, 76 level for a very long time before finally pulling back. But the question again is not if, it's when we see the markets come down, when we see the profit taking, when we see the pullback. So support level, keep in mind, at 53.32, down to as low as 52.61, to as much as 5200 on the S&P 500. But a very nice strong rally, almost back up to all-time highs with bit of an overbought RSI and MACD as well. Talking about the NASDAQ here, basically flat. So again, we are extremely overbought at almost 80 RSI, MACD pushing higher, L3 banker oscillator. Everything has just been ripping to the upside, 17.5% gain since my last big purchase on April 20th. Support level, like I said, at 17,000. That's going to be the first target, down to as low as 16,000. So those right there are a couple levels to watch, and we're closing in on almost 18,000 on the NASDAQ very, very soon. So hope you all enjoyed this video and a complete update on the markets. I also do want to remind everyone that we do have that 51% discount for the Money Vest beta launch. This is a special pricing that you can lock in forever, and you'll never have to you'll never be subject to higher prices, and you'll pretty much be locked in for life, and you'll have access to the entire platform where you can do a full comprehensive fundamental and macro analysis on individual stocks. Look at our Money Vest indexes, look at our Money Vest metrics, fundamental analysis, analyst estimates, including our discounted cash flow. And then, of course, we got our discounted earnings multiple model, calculated intrinsic values, and a lot of other features and functionality to be added over time. So it's going to be for a limited time and limited spots. So link's going to be down below. We'd love to have you on board. And as always, happy investing. I'll see you all in the next video, and congratulations to all NVIDIA investors. Take care.